Welcome back to another video on the Trade the Waves channel with Freddy the Fish, your host. Thank you for tuning in. In this video, I'm going to show you why I think Tesla is about to make a really big move to the upside. I do think bears got it wrong on this one, and let me show you why. This has nothing to do with the inauguration or President Trump and Elon Musk taking over, but everything to do with price action and the options flow. So let's look at this chart of Tesla right here. This is a daily chart. And what I have you guys looking at right here is when Tesla finally started falling in price from the 460s and it came down to the 380s. All these lines that you have right here are Fibonacci. We're not going to get too much into that, but all we want to know is where are the buyers? And the buyers are right here. So we found some buyers that made themselves known at 380. As we continue going, we see that those buyers pushed the price up and became aggressive, and they challenged the sellers. Now we're starting to see where the sellers exist. The sellers exist right here in this Fibonacci supply zone, which exists from 426 to 430. We know that because they've sold here before in the past. They sold here on 1231. Buyers tried to gap this move up and they tried to push into the zone, but sellers were quickly to sell. So we know that sellers are still holding here. So while we know that buyers found a place to buy and they found value because on January 2nd, they defended the price, they bought the dip. The following day, they not only defended that dip, but they also became aggressive and pushed higher. They then pushed a little too high, and now we knew where the sellers were at. So we keep going forward. Think about this as a volleyball, and the ball is just going over the net, being passed from the sellers to the buyers, from the sellers to the buyers. Kind of like an ebb and flow in the market. So now sellers have taken over the price and they're pushing down here. So what I want to see is, are buyers going to remain and defend this zone because they've already shown us that they are here? If buyers are still in control, we want to make sure that those buyers are still buying in the same area. So let's see what happens. We fast forward, and as the price begins to slowly wind down into the same zone which we know they should be buying, once again the question comes up, are the buyers going to buy? Which means, are these whales going to defend their position and keep buying? Let's keep going. These long wicks tell us that yes, they are buying. They are not being aggressive, but they are saving the price. They are saving the pattern. Let's keep going. Further proving that the buyers are still present and they are still going to defend this zone. They are adamant about buying the 380. And there we go again. So now buyers push up, but this time sellers become a little more aggressive. And instead of sellers allowing the price to go all the way up to 426 and begin unloading, we can see that they actually move down one zone and they start selling at the 417.16 zone. This shows us that while buyers are being adamant about saving this price right here, sellers are actually becoming aggressive because they moved from selling here to now selling at lower prices. As a buyer, you do not want to see that. We want to see buyer strength, not seller strength. Let us keep going. But look what happens the very next day. On January 15th, the buyers, although they closed down here, they gapped the price up into this territory and they pushed all the way back into the zone where they've been knocking a few times already. Let us keep going. So now, just like a volleyball, the ball gets bounced back to the sellers and they take control. However, look how they weren't able to drive the price down over here anymore. Why? Because they are getting weak. Because buyers are starting to buy at higher prices. And that is what you want to see when you think a bullish move can occur. you want to see the buyers paying higher prices, and you want them to make attempts at passing the sellers up, of closing prices in these little zones that they hold. In this case, it's 430 and 79 cents. And now fast forward to the 17th, which was yesterday. Buyers for the majority of the session held the price above their zone. They had it all the way at 440. However, towards the last hour or so of the session, the sellers managed to bring it back down and close it right underneath their zone. But look at how much buying pressure the buyers have been putting up. This is not bearish, this is bullish. Now, can the sellers come in last minute and put in a big red candle like this? Absolutely. But this right here does not show that the sellers are really in control at the moment. At the moment of this video, the buyers are in control. We can also see that back here there was greater than average buying, and we can also see that yesterday there was also greater than average buying. Nowhere in here are we seeing these kinds of red bars, which means sellers are selling greater amounts. Look at back here, back on 12/18 through 12/20. On these 3 days, there was a great amount of selling, and look what followed through. Big drop. We are not seeing this anymore up here. We are now seeing the opposite. Now I'm going to overlay a proprietary indicator, which also highlights that this area right here at 430 is key for the buyers to close above. Now that I have overlaid my proprietary indicator, notice how ever since the price crossed underneath, it has had trouble breaking above this indicator. This indicator also lines up exactly with the Fibonacci supply zone, which says that if we are going to find the sellers, we are going to be finding them in this area, which is exactly where we're finding the sellers. This also means that if these prices close above the indicator, we can start getting a bullish move just like we see on this side of the indicator. So really pay attention to what the price does when it crosses above 430.79. Once we see the first few days, or maybe just even day, when the price closes above 430.79, I do think we are going to see a big move fueled to the upside, with the first target being 450 to 463. Now, aside from the technical analysis, let me also show you what the whales did a few days ago. In front of you, you are seeing a contract that was opened up for April 17th, buying the Tesla 810 call. There's still 89 days left in this contract, and we can see that this whale filled this order on the 14th. They initially bought around 3,300 contracts, of which 3,200 stuck around, and they are still open. Now let's go back to the 14th on the chart. If we go back to the 14th, that is the day that we had a red day coming down right here. They bought the dip, and they bought the dip into some way out the money calls. That is a positive sign. Now, let me show you another contract that was also purchased heavily that day, and that one was the Tesla 770, also for April 17th with 89 days left. We can see this is where the whale bought. We can see that they bought a total of 8,400 contracts approximately, of which 7,600 stuck around and are still open, with just a few that were closed on the 16th. So this whale has been sitting on the 14th, which is most likely the same whale that bought the other calls right here. This whale has positioned themselves with a lot of money, saying that this thing is going to see all-time highs and go into the 700s. The 700s happens to be a Fibonacci extension zone. Very interesting. So, with all that being said, I do not see the bear case for Tesla. I do see a flag, and I do see some consolidation and a pennant style pattern. I do see that if Tesla manages to close above 430.79, it will challenge the 450 to 463 area. And if it can close successfully above that, we will go into new highs as all short sellers will close their positions. Buyers should remain and defend this price around 407 to 417. We should not see sellers taking over, bringing the price down and closing underneath this zone. If buyers have already made themselves known that they bought the dip here and they are pushing up and closing prices higher, there should be no reason for them to back off and start allowing prices to close down here back into the 380. So, of course, in the market, anything can happen. However, in this case, I do think that the sellers have it wrong.
Oh no, oh no.